What's going on, guys? My name is Richard. Welcome back to the channel. Today we'll be talking about the follow-through day concept, which is extremely important to know if you're a swing or position trader. And when it applies is when the stock market has corrected at least 10% and everything seems very bearish and there's a ton of distribution. And when this happens, it can be very hard to kind of flip the switch and go back to being bullish and looking for new opportunities once the stock market shows signs that the uptrend could be resuming. And this is where the rules associated with a follow-through day come into play to kind of force you back into the market in a small way to kind of shift your psychological perspective. And in this video, we'll go through the rules associated with a follow-through day, and we'll also go through a ton of examples to really cement this concept. And if you enjoy this video, please go ahead and leave a like down below. It really does help me out and my channel, and subscribe for more videos just like this one every single week. So first things first, what is a follow-through day? Well, a follow-through day is a day where there's a gain of 1% or greater on either the Nasdaq Composite or on the S&P 500, where the volume is greater than the previous day's session. And this day must occur at least 4 days from the potential bottom of that rally. And how do you identify kind of the bottom of the rally and what day it is from that bottom? Well, let's use the example of this day in 2018. And you can see that the stock market had been in a correction, and then here it forms this intermediate low, and this next day forms day one of that rally. And the day one is either the day after it bottoms, or it could be the day that it bottoms, depending on the closing range of the bottoming day. And if we go to this day right here, you can see that the closing range on that day was only 34%. So this does not count as day one. Instead, we start counting at the next day. And overall, you can see day one is here, day two, day three, day four. So this would be the first potential fall through day, but you can see we have to wait a few more days for it to occur. So this is day 4, day 5, day 6, and here it finally happens on day 7. And here you've got a gain of 2.64% with volume greater than the previous day. And the volume does not have to be above average. It just has to be above the previous day. And a very important thing to remember when it comes to fall-through days is not everyone is successful. And here you actually had 2 failed fall-through days before the true one, which actually happened on the S&P 500, not on the composite. So if we go over to the S&P 500, you can see here we have a gain of 3.43% with volume greater than the previous day. So this marked the successful fall-through day that started the uptrend in early 2019. So I want you to remember that not every fall-through day works, but it is a signal that you must trust every single time, because when it works, it'll get you in very close to the bottom, and you want to be buying at least a few shares to switch your mindset from being very bearish to now looking for new stocks to buy, which could have great gains by the time the uptrend really gets going. And also important thing to remember, and let's go back to the Nasdaq, is that not every rally leads to a fall-through day. And during a correction, there's often these dead cat bounces where the stock falls, then bounces sharply, and often fails again. And a rally fails when the low of that rally, so a potential bottom, gets undercut. So here you've got a rally failing right here, and this rally fails when it falls through and undercuts it on this day. So a very important thing to remember is that not every fall-through day works, and also not every rally leads to a fall-through day. But you must buy something, that's a rule, when a fall-through day occurs, because you want to get in that mindset to be looking for new opportunities, which could kind of give you a step ahead when a uptrend starts and nobody believes it. And this really happened in March of 2020. And if we go to TC 2000, let's go back to that time period on the QQQ and spot the fall-through day in real time. So first things first, we had a really steep correction, so over 10%. That is a criteria that is fulfilled. And then we're looking for a sign to slowly get back into the market. And we're looking for a sign that institutions have decided to buy shares and kind of restart the uptrend. So first things first, we're dropping, and then we have these intermediate lows, but they get undercut relatively quickly. And then we have the final low, and this happens on 323. And then we start counting. And this is actually a pink day, so pink day one, because the closing range was above 50%. So this is day 1, day 2, day 3, day 4, But if you look at this, volume was lower than the previous day, so this does not count, even though it was a gain of 5.27%. And after this, we still go sideways, and don't have that clear fall through day signal until the 6th of April. You can see that volume was higher than the previous day, although it's not above average. That's perfectly fine. And we have a gain of 7.15%. So this was a very powerful fall through day. And on this day, and this is very important, leading stocks were breaking out of bases and acting extremely well. And that's another criteria that you want to see during a fall through day. You want to have options to buy when it occurs. So today there is a potential fall through day. If we go to the present, although it's decreased somewhat, you can see we're only up 0.38%, but stocks like DDOG were breaking out. So if this day really turns around into the close and we have the gain of over 1%, this would qualify in my book as a fall through day. But you can see that the QQQ on this day is fading quite heavily, so it doesn't look like it's going to happen today. But if it were to happen, you can see that day one starts on this day, which is the intermediate low, the rally day one, and day two, day three, day four, day five, day six, day seven, and this would be day 8. So this would qualify, but it might not be as powerful because it's not in that sweet spot of 4 to 7 days. And I want to reemphasize that it can be either the S&P 500 or the Nasdaq Composite that gets that fall through day signal. And if we go back to the S&P 500, you can see that this actually has a fall through day on this day, while the Nasdaq had to wait until the 6th of April. And if we do the kind of criteria here, you can see that this is the potential low. Then we have day 1, day 2, day 3, day 4, day 5, day 6, day 7, and then finally on day 8, we have a gain of over 1% and volume higher than the previous day. While on the Nasdaq, if we go to that, you can see that this day was actually lower volume than the previous day, so there wasn't that sign of institutions jumping back and buying stocks in that index. So here you waited until the 6th, where we had a powerful fall through day on higher volume. So that is what a fall through day is and how you can find it based on the rally days and also the volume. And what should you be doing on a potential fall through day? Well, you should be buying a few shares of the leading stocks in the market, the potential true market leaders. And you should be finding this based on the relative strength characteristics, holding up near all-time highs, holding above their 50-day moving averages if the overall market is below that. And there's a ton of different ways you can do that. But really you just want to focus on relative strength and can slim characteristics. And you want to buy a few shares of these leading stocks, which could really go on to huge performances before this uptrend is over if that fall through day holds. And a great example is if we go to DocuSign, which on the fall through day on the Nasdaq, this day right here, started to move up through this really ugly cup and handle formation. But it really just kept going and trended higher and higher and higher and higher, and actually had a 100% gain before starting its true base. So if you can catch one of these high relative strength stocks on that fall through day, you can really have a great cushion to work with and hold throughout the uptrend and get some great gains after an ugly correction. So that is what a fall through day is and how you can use it in your trading. And if you still want to learn more, there are a few articles and videos listed in the description that you should definitely check out. But that's it for me. Thank you guys so much for watching. Please go ahead and leave a like down below and subscribe if you're new to the channel. And I'll see you guys in future videos.